Sunil Singhania, good morning to you as well. Adrian Mobad, thank you for joining us. Sunil Singhania, historically, every time when we've interacted with you before the budget, you smile. You start with a warm smile. The smile is missing. So looks like you're not bullish. You're simply observing.
No, I think I was waiting for my turn to come. So, I think we have budget every year. So, obviously
nice
it's
covered up,
only
Sunil.
an hour away. Thank you. So I think, we are optimistic and we are positive on India. These things keep on happening, challenges keep on cropping up. But let's see, we are only an hour away from the budget presentation. Hopefully all our questions will be answered by then.
Sunil Singhania, we won't get into the tax, debate or rich versus poor or anti-rich or poor. What I want to understand from you, Sunil, is the following. What is your assessment of the market positioning? There is fear, there is chaos, there is nervousness. And do you think a mediocre budget also could do the trick for us in the short term? Because the market positioning is such that nobody's expecting anything big or large.
See, very clearly we have to accept that we have been, going through challenging times over the last 6-8 months in particular. Apart from obviously what has happened domestically, the global scenario has also not been all that great. As Shankar mentioned, there is concern over the various central bank actions and so on and so forth. Having said that, I think we get into this budget with expectations being maybe, at an all-time low pre-budget. We have not seen any kind of pre-budget optimism, pre-budget rallies. On the contrary, whatever negative we can think of, we have all sort of thought about the negatives, what can happen in the budget. So to that extent, I think this is a budget where expectations have been really, really low. And from here on, you can paint a doomsday scenario saying that this is happening and that is happening. And on the other hand, you can say that yes, we have gone through challenges, but we are maybe, reaching a basically point where these challenges are slowly getting resolved. And we might have a few months of, volatility more. But from our perspective, we are seeing more positives and negatives emerging. And I think that is what we would be looking at as far as the budget is also concerned. So, be optimist. We do believe that somehow, the benefits of the low oil price will be, will benefit the country, whether it is retained by the government or passed on to the consumers directly, or even corporates benefiting out of lower input prices. I think all that is going to help the country, and I think that can be the big swing which we can look forward. As far as the budget is concerned, it's more directions that we are looking at, and all the routine things of government spending and fiscal under control, and not too much changes as far as the set sort of tax regime. I think that will all be taken quite positively by the market.
Well, that's a fund manager talking, Sunil, but we will definitely dig more into all that you had to say about the budget in just seconds from
Sunil Singhania, the next question is coming your way. What if today the capital tax structure is just tinkered with? Instead of 1 year, that becomes 3 years. As of now, we are discussing a binary event. What if the announcement is more like middle of the path?
See, as I mentioned earlier, Nikunj, pre-budget, most of the, sort of negatives have already been discussed. And as you mentioned, to some extent, people have started discounting the fact that there's going to be some tinkering as far as the capital gain structure is concerned, specifically on the long-term side. So if it happens to be lower or slightly better than what the street is expected, obviously it is going to be positive. However, having said that, I think more the direction is important rather than the tinkering of long-term structure. Our view is that there is a need for incentives to be given for long-term investment as far as equity is concerned in this country, because if a country is to grow further from the $2 trillion economy, there has to be incentivization of domestic savings being channelized into equities. And we are very confident that the government and the Ministry of Finance realizes it, and there should not be too much of a concern relating to the tinkering of capital gain structure as we speak.
Certainly, everybody's hoping for that. Ramesh?
Sunil Singhania, if the government commitment towards bank recapitalization is large, anything above 30 to 35,000 crore, will that make case for large PSU banks to rally in the medium term?
See, Nikunj, we have seen obviously a very, very stressful December quarter. And as we speak, most banks have guided for an equally challenging, March quarter. And to that extent, I think the markets have been, sort of discounting what we are seeing. At the same time, we have seen a couple of large deals which have come in, one over the weekend, which gives credence to the view that yes, there are some stressed assets, but at a price there are buyers or there is value in some of these stressed assets. Along with it, if the capitalization number goes up, then the fear of the banks not being able to survive, that will basically start to subside, and a lot of these banks will start to get traded as a going concern rather than on a breakup value kind of a thing. So I think at the margin we do need capitalization of some of the weaker banks. I think more than the capitalization, some of the other sort of events which have taken place, which Rameshji mentioned, the bank board, and maybe the direction which the government also lays down in terms of the future as far as consolidation. We have a Gyan Sangam coming up 1 week after the budget. I think all this put together would have to be viewed rather than just a number of capitalization, whether it's 30,000 or 40,000, because what is positive for one might not be positive for the other. So I think we'll have to look at the...
Yeah, but it's important to note, look at the way these PSB stocks are rallying right now. SBI is your biggest move on the Nifty, followed by a PNB, and then comes a BOB. In fact, as I speak, all of the Nifty PSU bank composites are all holding out in the green. SBI is rallying a good 5% as we speak. There could be a scrappage policy in the CV as well as the passenger vehicle segment as well. So that's going to be positive for all commercial vehicle manufacturers and PV OEMs as well as ancillary. So I want to just check in on what Ashok Leyland, Bharat Forge, Eicher, Maruti, etc. are currently doing in trade. Having said that, there may be an anti-pollution tax or a cess against diesel vehicles. We've seen how heavily some of the state governments have actually come down or clamped down on some of the diesel car manufacturers. So look out for these, and like Nikunj pointed out, look out for what ONGC does. There may be a 10% excise duty on a cigarette across lens. So look out for ITC, Godfrey Phillips, a whole list of stocks to watch. But the key 10 things that you need to look out for, them up for the benefit of our viewers. The first one, of course, look out for what the FY17 fiscal deficit target is from the hour-long speech that you're going to hear out from the finance minister. What the FY17 gross borrowing target is, that is something that the street is going to look out for, that particular number. PSU bank recapitalization plan, the quantum and what the government, or rather the finance minister's commentary is, a higher lock-in for long-term capital gains tax. This is something key that the market is going to look out for. Fifth point, the steps to boost the rural economy. We've seen how a slump we've seen in the rural economy right now, and what the government plans to do to actually bring about an uptake. A cut in corporate tax, a hike in service tax to align it with GST. Perhaps that's the expectation. We may just hear the government, the finance minister do that this time. The FY17 divestment target is also something that the street is going to look out for, and what they actually plan to do. What is the divestment roadmap, not just the number that they're working with. The strategic sale of government assets. So just a continuation of the point that I was just talking about, a hike in capex outlay, whether they, or rather how they plan to actually boost infrastructure as well as irrigation spend, and the roadmap for the subsidy rationalization. So
Right.
just gut feel, Shankar, is it going to be below 7,000 Nifty day?
Whether it is there today or not, I think you will see that in the next few days.
Sunil Singhania, let's now talk about Nifty or Sensex levels. What about the valuation bottom in this market? Are we there, or another 10% in this kind of an environment cannot be ruled out?
See, 5-7% is always fine, but we have seen in the past that the best opportunities are obviously when the chips are down, and we will admit that most of us have been wrong with the last 6 months in terms of the intensity of the fall. However, having said that, markets are markets, and you'll always get opportunities.
Are coming from the